Welcome to this presentation by Facilitators Research. This research is distributed exclusively for informational and educational purposes and does not constitute financial, legal, tax, or investment advice. For such services, you may reach out to speak to one of our officers.
Capital markets activity in Africa has expanded significantly over the past decade, driven by pension reforms, government debt issuance, growing equity markets, and increasing cross-border capital flows. The capital markets subsegment encompasses investment banks that originate and underwrite securities, brokerages that execute trades for institutional and retail clients, and securities trading firms that provide liquidity and market making. This presentation examines the African capital markets landscape, focusing on the multi-billion-dollar institutions that anchor it and the structural forces that will determine its trajectory over the coming decade. African capital markets now command significant scale. Total bond market outstanding across sovereign and corporate issuers exceeds $1.5 trillion United States dollars. Equity market capitalization across all African exchanges totals approximately $2 trillion. Annual equity turnover is approximately $45 billion, with the Johannesburg Stock Exchange dominating the share. More than 1,250 companies are listed across the major exchanges, providing a deep and increasingly diverse opportunity set for investors. Despite this scale, African capital markets remain underdeveloped relative to GDP, with significant room for growth over the coming decade. The capital markets landscape is anchored by South African investment banks. Rand Merchant Bank, the investment banking division of FirstRand, consistently leads South African debt and equity capital markets league tables. Standard Bank Corporate and Investment Banking, ABSA Corporate and Investment Banking, and Nedbank CIB round out the South African Big Four. Outside South Africa, Renaissance Capital leads Pan-African equity capital markets from its Moscow origins, but with significant African operations. EFG Hermes dominates Egyptian capital markets with operations across the Middle East and North Africa. Citadel Capital leads Egyptian private equity. In Nigeria, FBN Quest and ARM Securities anchor the local capital markets scene. South African investment banks dominate the African capital markets landscape. Rand Merchant Bank, founded in 1977, has built a track record of leadership in debt capital markets, project finance, and mergers and acquisitions advisory that extends across the continent. Standard Bank Corporate and Investment Banking leverages the parent bank's 20-country footprint to lead African cross-border deals. ABSA Corporate and Investment Banking, after separation from Barclays, has rebuilt a strong Pan-African franchise with particular strength in debt capital markets. Nedbank Corporate and Investment Banking rounds out the Big Four with particular strength in mining and energy advisory. Together, these four firms capture the majority of investment banking fees generated in Africa. Egypt and Nigeria are the two most significant growth markets for African capital markets. EFG Hermes, headquartered in Cairo with operations across the Middle East and North Africa, dominates Egyptian equity capital markets and has built a leading position in frontier market research. The Egyptian Exchange, with more than 200 listed companies and a market capitalization exceeding $60 billion, provides a deep underwriting opportunity set. In Nigeria, FBN Quest, the investment banking arm of FBN Holdings, and ARM Securities lead local capital markets activity. The Nigerian Exchange Group, with approximately 150 listed companies, has been a particular beneficiary of government bond issuance and the growing pension fund industry. The African capital markets product suite is anchored by 5 categories. Debt capital markets. Sovereign bond issuance is the largest product category, followed by bank issuances and growing corporate bond markets. Equity capital markets. Initial public offerings and rights issues remain episodic, with activity concentrated in South Africa, Egypt, Nigeria, and Morocco. Mergers and acquisitions advisory. Cross-border M&A is the highest fee product, with significant activity in financial services, telecoms, and energy. Project finance. Infrastructure project finance is growing rapidly, supported by development finance institutions and pension fund capital. Securities trading. Cash equities, fixed income, and a growing derivatives market drive trading revenue, particularly in South Africa. African capital markets benefit from significant structural strengths: a young and growing investor population, deepening pension systems, increasing government bond market liquidity, strong demand for infrastructure finance, and growing appetite from global frontier market investors. South African capital markets are globally competitive in derivatives, mining finance, and project finance. The constraints are equally significant: shallow local currency corporate bond markets, episodic IPO activity, limited analyst coverage outside top stocks, exchange controls in some markets, foreign ownership concentration that drives volatility, and high issuance costs relative to deal size. The continent still raises less than 3% of global capital markets volumes, leaving substantial room for growth. South Africa dominates African capital markets volumes, with combined equity and bond outstanding exceeding $1.3 trillion United States dollars. Egypt follows at approximately $220 billion, with a particularly active sovereign bond market. Nigeria holds approximately $95 billion in outstanding securities, dominated by government bonds. Morocco follows at approximately $75 billion, with a balanced mix of equity and debt. Together, these four markets account for more than 90% of total African capital markets outstanding, leaving the remaining 50 markets as a long tail of smaller and less liquid exchanges. 5 strategic imperatives will determine which capital markets firms capture the next decade of growth. First, build ESG origination capability. Green, social, and sustainability bond issuance is the fastest growing product category, and firms with credible ESG frameworks will dominate. Second, expand cross-border distribution. Pan-African distribution of securities, particularly to African pension funds, is a structural growth opportunity. Third, invest in digital distribution. Digital client onboarding and execution platforms will determine which brokers capture the next generation of retail investors. Fourth, develop local currency bond markets. Firms that build local currency bond origination capability will be rewarded with structural growth as governments seek to reduce foreign exchange exposure. Fifth, cultivate frontier market research. Independent, high-quality research coverage of frontier African markets is the gateway to attracting global institutional flows. In summary, African capital markets volumes will grow at low double-digit rates over the next decade, driven by pension deepening and infrastructure finance. ESG origination will become the fastest-growing product category, with green and sustainability-linked bond issuance leading. Cross-border distribution to African pension funds will unlock a structural new pool of demand for African securities. And digital brokerage platforms will reshape retail investor access across the continent within 5 years. The capital markets subsegment will be a primary beneficiary of African financial deepening over the coming decade. Thank you for watching this examination of capital markets.